Y'all doing good, people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. I'm not a financial advisor. I'm not a CPA. I don't have a CFP. I'm just a guy on YouTube who enjoys sharing my 30 years worth of investing experience with folks to help them collapse time frames and hopefully get them to their pot of gold at the end of the rainbow faster. So please understand that I'm not a financial advisor, but I am a guy that has 30 years worth of experience building wealth through investing in real estate for income, investing in paper assets, building businesses, side hustles, 25 years in commercial banking. So I understand my way around the financial system, the financial markets. But again, that doesn't mean I'm here to tell you what to do. I'm just sharing with you my opinion and my experiences. So having said that, let's get going. If you'll do me a big favor, if you want to follow me when I'm not on Instagram, matter of fact, if you want to follow me when I'm on Instagram, go down to the description box and click on that Instagram link, Richard Fain Millionaire Mentor Instagram link. So when I'm off of YouTube, you want to follow me on Instagram, that's where you do it. A lot of you have done that in the past because on my old Instagram page, I had 90,000 followers. That Instagram page is no longer operating. That's Richard Fain 28. It's done, disabled. So the new one is Richard Fain Millionaire Mentor, and that's down in the description box. Like halfway down, you'll see a Instagram link for Richard Fain Millionaire Mentor. If you want to keep up with me when I'm not on YouTube, just click on that link, give me a follow, do me a big favor, send me a DM, let me know you're rocking with me so I can say thank you. Second thing, website, www.richardfain.net. That's the new website, been up about 2 months. Over 150,000 of you guys went and checked out the website, so thank you very much for that. I really, really appreciate that. A lot of you have made an investment in yourself and picked up some digital products. Those digital products were handpicked by me. They basically, encompass my entire YouTube channel, right? I got over 1,100 videos, guys, on my YouTube channel, my main YouTube channel. And those 10 digital products pretty much sum it up. All right, so if you're looking to collapse time frames, get information that you can act on, execute on, those digital products are not a bad place to start. Everything from credit repair, credit restoration, building your credit score, to investing in the stock market, to getting your mindset right through Millionaire Mindset, digital product. If you want to become a better money manager, learn how to budget your money so that you got money left over at the end of the month so you can invest to build wealth. That's on there. Small business survival guide. So for you people who want to start a business or you already own a business and you're just trying to get more information to help you scale that business, that small business survival guide is jam-packed full of good best practices and things like that that you can use to help you do whatever you want to do with your business. Maybe some of you guys want to start an online business. I got a digital product on the website that will help you A through Z. Again, guys, it's about information that can help you get there. If you feel like you don't need information and you're just going to wing it, then ain't got to worry about the website, right? If you're just going to wing it, it'll just come to me one day. No, that's not how it works, guys. You got to have information, and then you got to be able to execute on that information. So that's what the website will help you do. And then, if you want to be a part of a private mentorship club that I have, that's the only place on the internet I do mentoring. So I don't care who contacts you, none of that stuff. That ain't me, because I don't contact people and tell them about my mentoring. I don't contact people and tell them about my YouTube channel. I don't contact people and say, hey, I use this brokerage app. You want that? That's not what I do. I talk about it on my YouTube channel. Anybody contacts you that's saying they're mean, then you know that's a lie. Because I don't just contact people out of the blue. You're just not gonna wake up one morning and, ooh, who's this Richard Fain guy? Here's an email from him. No, that ain't how it worked with me. I don't do that. The only place I spend time and tell people about what I do in my business is on my YouTube channel. I don't have no email campaigns where I'm trying to go out and I don't pay somebody for some email list and you get an email from me. I don't do that. It's just through this YouTube channel. So if anybody contacts you just out of the blue, guys, it's not me. It's not me, because I don't contact people out of the blue, right? Now, if you want to be mentored by me, like I said, through my website, you can join my private mentorship club. And again, guys, it's a paid membership. It's a paid mentorship club, but it's a very small price for what you get. We already got 600 people over there in the mentorship club that have access to me and 600 other people that are going the same direction they're going, which is financial freedom. So if you want to get yourself around a group of people who can help you, who can provide value, who can give you their investing experience, who can, be a community to wrap themselves around you and help you get to freedom. And plus, obviously, you're gonna have me over there where you're gonna have direct access to me 7 days a week, 365 days a year. That's the only mentoring I do. There is no other way to get mentored by me other than through that private mentorship club. So if you want to be a part of that, get over to the website, www.richardfain.net. Second link down in the description box. Go click on that link and then grab some digital products and then decide if you want to be mentored by me or not. If you want me in your gang of 5, if you want me to be on your financial team plus 600 other people on your financial team. If you want to be a part of that community that's growing like crazy. Like I said, guys, we've been doing this a couple months and it's already 600 people in there. By the end of the year, we'll have 1,000 people in there, all going in the same direction, right? That's what we want. We want a community of folk. We want 10,000 people all going in the same direction, all helping one another, all encouraging one another, right? That's what we're looking for. Being out here by yourself, trying to build this wealth on your own with all this negativity we got in our world about building wealth. And why do we have so much negativity? Because of this. Most people can't comprehend not living in an instant gratification world. Most people live there in an instant gratification world, right? Every time they get, they spend it. When you go the opposite direction of that and you're saying, no, I'm not going to be spending my money on stuff that don't make me rich, it makes somebody else rich, I'm gonna start taking this money and investing it. That's not what most people do, right? And the statistics speak for themselves. Y'all know I've talked about these statistics for 4 or 5 years on this YouTube channel. The statistics speak for themselves. So if you want to be with a group of people who are going in your direction and understand the value of not taking their money and spending it to make somebody else wealthy, but they understand the value of actually taking their money and investing it in assets to make them wealthy, that's where you want to be, right? You want to be immersed in that type of community. And that's what we're building over on the Discord platform. That's what we're building. So if you want to be a part of that, like I said, get yourself over there and join. Last thing, and then we're going to jump into what we got to talk about today, which is an important topic. We're going to talk about it. We got 3 topics we're going to talk about, but the major topic is these banks. But we'll get there in a second. Last thing is, y'all know, guys, I'm a huge paper asset investor. I'm a huge investor in the stock market. And the way I do that is through a brokerage app. Currently, right now, that I'm using is Mumu, the Mumu brokerage app. I'm buying paper assets, stocks, individual stocks, ETFs, those 2 things, individual stocks and ETFs. And I've been talking about this since the beginning of this year on this YouTube channel. I believe this is the greatest opportunity in a long time to build wealth through paper assets, right? I'm a big believer in building wealth through real estate as well. But right now, paper assets to me, in my blueprint, is the most efficient way to build wealth. Number one, I ain't got to be the expert, right? In most cases, right? Because I'm investing in ETFs. And then when I do want to be the expert a little bit, I just invested in big boy blue chip paper assets, individual stocks. But through that Mumu app, that's what I'm using over the next 10 years to triple my net worth. If you want to join me, and hundreds of you guys have already joined me in using the Mumu brokerage app, because that's what it is. It's a brokerage app, right? It's a way for you to be able to decide you want to invest in an ETF or an individual stock, and you want to continue doing that over a long period of time, and you need a convenient, reliable brokerage app to be able to do that. And that's what Mumu, in my opinion, offers me. And I believe it offers that for hundreds of other people who have decided to use the brokerage app. No brokerage app is perfect, right? Every now and then you're gonna have some type of delay or kink. That's just the way it works, guys. I mean, I got 4 brokerage accounts that I use. 2 of them are big gigantic brokerage firms, Vanguard and Merrill Lynch. Big boys, full service brokerage firms. And they have glitches. So, this notion of, oh golly, a self-directed brokerage app, it's gonna be a glitch. No, all of them do at some point. And all I'm telling you is figure out what's right for you. If you wanna rock with me and use the same brokerage app that I'm using, you're more than welcome to. That doesn't mean you have to, but you're more than welcome to. Get down in the description box and click on that Mumu link. Now, here's the thing. When you open your Mumu account, and if you put $100 in your brokerage account to start investing with, you get 5 free stocks, free. Why do they do that? They're just giving you that in order to incentivize you to use their brokerage app. No different than any other company in the world, guys. They will incentivize you by giving you free stuff to use their whatever. That's just the way it works, right? Nothing wrong with that. Put $1,000 in there, you get 15 free stocks. Publicly traded companies. Now, the $1,000 you put in there ain't to get. They don't say, well, okay, you got to buy these. No, it's free. Again, it's incentive based. The more money you put in there, the more you want to invest. They incentivize you with more stock, free stock. So those are the 2 things that got going right now on the Mumu app. Plus, obviously, it's a world-class brokerage app, in my opinion. I've been using it, and it's been fine. I've had no problems with it. And if I do have a problem, I email customer service, they rectify it, and I'm good to go, right? No different than anything else we buy in this world, guys, right? I go buy a brand new car, I pay an obscene amount of money for it. I got it 2 weeks, something goes wrong with it. That's life. That doesn't mean it's a crappy car. That just means it's life. Something happened to it. I take it to the dealership, they fix it, I go about my way. So let's not be tripping about, things like that. Let's just get ourselves in a position to build wealth. And I think one of the ways you can do that is having a good self-directed brokerage app. So get down in the description box, click on the Mumu link, give them a try. Like I said, put your $100 in there, get your 5 free stocks. Put your $1,000 in there, get your 15 free stocks. And then I'm going to go ahead and send you some information. 2 tutorial videos to show you how to use the Mumu brokerage app, which Mumu prepared those tutorials. They're very, very easy to understand. It walks you through every step you need to do in order to position yourself to start buying paper assets. Whatever paper assets you want to buy. You can buy whatever ETFs you want to buy. You can buy whatever individual stocks you want to buy. That's on you. That's your decision. But you'll have the platform to be able to do it. They don't charge any commissions to buy or sell paper assets. No commissions, right? No hidden fees, no monthly maintenance fees, no annual maintenance fees, nothing, right? So give it a shot and then send me that email through my website, www.richardfain.net. Let me know you've opened your Mumu account, and I'm gonna send you those tutorial videos, but I'm gonna do you one even better. I'm gonna send you the blueprints that I've put in place, and it'll walk you through everything that I'm buying in the paper assets, my ETFs, and why I'm buying them. And it's going to tell you what individual stocks that I'm buying and why I'm buying those. There's a reason I've been doing this for 30 years, guys, because it builds wealth. Now, there's no guarantees in this life. But in my 30 years of doing this, I've built a lot of wealth by being patient, consistent, and disciplined. Buying paper assets, the right paper assets, long-term, in my opinion, has done wonders for my net worth. And I believe it has done wonders for a lot of other people that I've talked to since I've been on this YouTube platform doing these videos about helping people get to wealth. Many people have experienced what I've experienced. And if you're looking for a way to build wealth, long-term wealth, through historically proven investments, then give it a shot, man. And like I said, you're going to get the information from me. All you got to do is email me. I opened my Mumu account. I funded it, Richard. Can you please send me those tutorial videos? Can you send me your wealth transfer blueprint 1.0, 2.0, so that I can get off to a good start? And I'll do that for you. Well, all right, man, let's get on into this stuff. Let's get on into what's happening with these big boy banks. So you got 3 big boy banks. You got JP Morgan Chase, you got Bank of America, and you got Wells Fargo. Now you're talking about the 3 largest banks in America, right? 3 of the largest banks in the world, right? So you got that. You got that. And these folks are in a situation, these big banks are in a situation where customers are getting scammed out of a lot of money. So here's the headline, and then we're going to dive into it. Here's the headline. JP Morgan Chase, Bank of America, and Wells Fargo customers lose $456 million in 1 year. So multiple years, you're talking about billions of dollars. You're talking about $500 million in 1 year that these 3 big boy banks, customers, have been scammed out of. A dirty little secret called Zelle. Now this is coming from, not from Richard Fain. No. This ain't coming from me. This is coming from the United States Senate Committee Chairman. This is coming from the United States Senate. That's what they're saying. It ain't what I'm saying. I'm just telling you what the United States Senate is saying about these 3 big banks. So let's make sure we get that straight. I'm not saying that. I'm reading an article that's based on what the United States Senate is saying. JP Morgan Chase, Bank of America, and Wells Fargo are failing to protect customers from hundreds of millions of dollars in scams and fraud per year, according to the U.S. Senate panel. I'm telling you guys, you gotta be careful out here with these banks. You better be careful. Let's keep reading. At a hearing held by the Permanent Subcommittee on Investigations, Democratic Senator and Chairman Richard Blumenthal said the banking giant's customers submitted claims to recover $456 million in 2022, all due to fraud and scams on the payment network Zelle. So basically, people have gotten scammed by using Zelle. And you know, Zelle is widely used by these 3 big boys. Now, ain't the only people who use it, but these 3 big boys definitely use it, and people are getting scammed. The Bank of America the banks of America have a dirty little secret called Zelle. Zelle markets itself as a fast and easy way to send and receive money. But as this committee has found, a fast and easy way to lose money is often what happens on Zelle. Senator Blumenthal says Zelle, a network owned by 7 U.S. banks, including Chase, B of A, Wells Fargo, creates a veil of security while leaving customers far too vulnerable to fraud. Did a lot of y'all know that, though? Did a lot of y'all know that 7 big boy banks, including the 3 that's in question here today, actually own Zelle? Did you know that? I don't know. I'm just asking, did you know that? I knew that, but did you know that? That's why I keep telling you, you got to figure out what's going on and who owns what and where in this financial world that we live in, guys. Because a lot of times, big banks are behind that, right? Big banks are behind that. So again, what does Zelle do? It markets itself as a fast and easy way to send and receive money, right? So here we go. Zelle transfers are nearly instant and irreversible. So that means when you go on the Zelle, wherever you get it at, Bank of America, Wells, JP, the other four, you put it in and you send it, it's instant. And it's pretty much you can't get it back. And now if you read the little fine print, they tell you that in some cases, but you gotta read the little fine print, right? So Zelle transfers are nearly instant and irreversible, and by the time a consumer knows they've been scammed, usually it's too late to do anything about it, at least according to Zelle and according to the banks that own, control, and operate Zelle. So when that money gone, I mean, they're saying, guys, it's gone. I mean, you got to know this before you send something, or you got to know, you know what I'm saying? So let's keep moving. Zelle and the banks that own it offer to customers the appearance of the trust they feel and deserve. But the risks there are real and present. And they simply are failing to protect consumers in the way that they deserve. The Permanent Subcommittee on Investigations found that of the 456 million customers reported lost to Zelle scams in 2022, 341 million was repaid. According to the panel, 13% of users on Zelle and other peer-to-peer payment platforms report sending money to someone and later realizing it was a scam. In response to the Senate panel's inquiry, Zelle released a statement via its parent company, Early Warning Services LLC. So here's the thing, guys. Someone contacts you, whatever, you're buying something from them, they're selling you something, whatever it is, some service. Please do your due diligence on these people who you're sending money to. I tell people all the time, guys, please don't send money to people you don't do your due diligence on. Somebody sliding into your DMs or somebody emailing you with a too good to be true. Just be careful when you're sending money to people electronically. You know exactly who you're sending it to. I wouldn't want to do my due diligence after the fact, which a lot of us do. And I'm not blaming customers for being scammed. I'm just saying, slow down, do your due diligence, and make sure whoever you're sending your money to, it's legitimate. Because if you're depending on these big banks to dig you out a hole, you kind of know where this is going, right? So it says, Permanent Subcommittee on Investigations found that of the 456 million customers reported loss to Zelle scams, 341 million was repaid. According to the panel, 13% of users on Zelle and other peer-to-peer payment platforms report sending money to someone and later realizing it was a scam. In response to the Senate panel's inquiry, Zelle released a statement via its parent company, Early Warning Services LLC. Providing a safe and reliable service to consumers is the top priority of Early Warning Services LLC, the network operator of Zelle, and our 2,100 participating banks and credit unions. As a result of our continued efforts to build on Zelle's strong foundation of security, less than 1/10 of 1% of transactions are reported as fraud or scams, making Zelle one of the safest ways for consumers to pay people they know and trust. Bingo, that's the key. Just like I just said, you gotta know and trust whoever you're sending this money to, guys. You just really do. Zelle is also currently generally free for most consumers. And that's true. I use Zelle, and I've never been charged anything, but when I use Zelle, I only use Zelle when I'm sending money to people that I know and I trust. I don't send Zelle to somebody I'm buying something from on the internet. I don't. I don't. If I'm buying something on the internet, I'm using my normal, regular credit card where I got the zero. I ain't got to worry about no fraudulent stuff. And if it is, boom, I hit my credit card company, they give it back. That's the only way I pay for anything online is through a true credit card. I don't use nothing coming out of my bank account to pay for nothing online because of all the scams. Whereas I know I'm protected, truly protected with the credit card companies, in my opinion, at least the credit cards that I use, right? So just be careful out there when you're using Zelle. Again, I'm not saying I'm not against Zelle. I'm just telling you, be careful before you send people money, man. Now, the business that I'm in here on YouTube and obviously doing the one-on-one sessions through my company, RF Financial Consulting, that's one of the payment options that I provide people because it's free. I also provide Cash App because it's free. I provide PayPal. So either way, people can pay me through those three. But I always encourage people, do your due diligence before you send me money for my one-on-one sessions, right? But that's the only thing I really use those three payment systems for, is for the one-on-one sessions. Everything else is already done through Squarespace, or it's done through some other online payment system where people are predominantly using their credit cards. So all I'm telling you guys is know who you're sending this money to when you're using Zelle. I believe personally, from my personal experience, it's amazing because for the trusted people that I know that I use Zelle for is instantly. And that's typically my family members and people like that. If I got to send them money, it's just an easy, convenient way for me to do it. They don't get hit. I don't get hit with any fees, and they're good to go. But I only use it for trusted people. I don't just say, hey, I'm buying something from some guy, that I met, that, he's selling something on Craigslist and he's going to mail it to me and I'm going to send him something through Zelle. No, I don't do that. I don't do any of that kind of stuff, right? Right? So be careful. These major banks, now again, they said they're making it safe, and I believe that. But of course, they're major banks. So they always got an ulterior motive, right? Of course, they're making money. They ain't just doing this out of the kindness of their heart. They're making money somewhere, right? I don't know if it's on the receiver end or the sender's end. When I send money, Zelle, I'm never charged for it. So how they making money, I don't know, but I'm sure they are. They got a transaction fee somewhere around here, because they're moving a lot of money through Zelle. So there's a fee coming from somewhere, right? Be careful. These are for-profit banks. They make a lot of money off of interest income. They make a lot of money off non-interest income. So just be careful when you're out here using them. Make sure you know who you're sending your money to when you're using Zelle. I just thought that was a crazy story when I saw the numbers. I'm thinking, golly, I use Zelle. How can so many people be getting scammed like that? I mean, you're talking about $500 million in 1 year that people reported, $500 million to scammers. I'm thinking, goodness gracious, this scammer thing is just billions and billions and billions and billions of dollars every year. People getting scammed. So just be careful out there. Like I said, not just through Zelle, but through Cash App, through Venmo, through PayPal, through any of these processors, money transfers. Be careful. Be careful, because once that money gone, hopefully, if it's a scam, you get it back. But just be careful. Make sure you do your due diligence before you fire anything off. So I want to talk a little bit about the stock market, guys, as it relates to last week. Big week, right? Big week. We had some things, some catalysts that happened during the week that kind of affected the stock market. The first big gigantic thing that happened in my world was the 10-to-1 split for Nvidia. That happened on Monday, June 10th. That was the big, gigantic thing for me because I'm a huge investor in Nvidia, the company, through its stock. I'm a huge, huge investor. I'm gonna continue making investments into that company because I believe it gives me a good chance to multiply my net worth. So that was the first catalyst, first big event for the stock market for me. Because when you got a company that's fast growing like that and they do well, it typically reverberates throughout the stock market, especially in the tech space, in the tech industry, when they do well. So that was the first one. The second big thing that happened last week was the Fed meeting. That was on Tuesday, the 11th, and Wednesday, the 12th. So we talked about that. So I'm not going to go into too much detail on that, but we talked about that. That too was a huge thing that happened last week because we were, trying to figure out what's going on with interest rates. And the Fed gave us what was going on with interest rates, right? They said, hey, interest rates are going to stay where they're at. We're not going to increase them. We're not going to decrease them. We're going to keep them where they're at. Fed funds rate 5.5%, not moving it. We did get some forward guidance. They said, hey, one rate cut this year, still on the table. 4 rate cuts for 2025 on the table. So for an investor like me who invests a lot in the stock market, like I said, 75% of my net worth is in ETFs and individual stocks. 75% of my net worth. 25% of my net worth is on the sideline, right? In cash. So I keep always a portion of my net worth in cash, guys, always. Why? Because I got to sleep at night. Plus, with 75% of my money in there, I got to have enough money on the sideline that'll last me for years and years, just in case I get a correction in the market and the value of my 75% in the stock market goes down for a year or two. I'm not finna sell it all. So I got to have enough cash on the sideline to make me feel comfortable to mentally be able to get through that volatility. So that's been my strategy for a lot of years, though. It's never been my strategy to have 100% of my money in the stock market or in any other investment. I always want to keep at least 25% of my money on the sideline because I'm a long-term guy. And when you're a long-term investor, you're going to have volatility. Now, if you're a short-term person, you're just going to stick your money in there for a couple of weeks and make you a quick buck and get out. That's different. But I don't do that. I stick mine in there and it's going to be in there for 3, 5, 6, 7, 8, 10 years. So I got to have money on the sideline to be able to keep me comfortable. And if I do get a correction where the market goes down by 20% temporarily and it lasts a year or two, I'm not panicking. I'm not trying to panic sell. I just stay the course, continue, got my little reserves over here. Plus I'm still earning. So I take the money that I'm earning. I continue buying that dip. And then when things swing again and the market goes back up again, boom, that's where I capture a lot of net worth. So I don't stop buying when the market goes down. I actually intensify my buying when the market goes down. Because why? I'm getting the same companies now at a cheaper price per share. I'm getting them at a discount, right? So if I was buying Nvidia at $130 a share, just rolling right along every month, buying it at 130, 128, 132, just kind of. And then all of a sudden we get a market correction and Nvidia goes down to 115. Nothing's happened to Nvidia. Nothing happened to my ETFs. They just went down because the overall market went down. That's an opportunity for me to buy the dip and just buy them lower, just buy more of them. And that's where I will go to my emergency, my reserve money, and then I'll dip into the reserve money to buy more. And then, 5 months, whatever it is, it recovers. Now I just bought all of these shares down here at 115. Now all these shares I bought at 115, they're back to that 130 again where I'm used to buying them at. I just made $15 a share on those shares that I bought when the correction happened. So that's how I build wealth long term, guys. The strategy is just to be in the market every single day with money, not buying every day, but just have my money in the stock market every day. And I do that through long-term investing, right? Dollar cost averaging in every single month, I'm buying. And if there's a correction, I take money off the sideline and I buy more. Once the correction is over, market goes back up. I don't take any more money out of the reserve. What I do is I just continue with my normal dollar cost averaging. And that's how I've picked up a lot of net worth over the last 25 years, is using that simple technique. And again, you got to execute that with your plan. You got to figure out what you're trying to get accomplished. But paper assets can help you get there, right? I think paper assets is a really, really good asset class to be able to help you build wealth. And then the last thing that happened last week that affected the stock market was the CPI inflation report for May, which affected the stock market in a good way, because that report showed inflation was steadily coming down. It was incrementally going down. That was a good report. That was a report that helped the stock market bounce a little bit last week, right? So you saw some movement in the stock market. I thought it was good. You see a company like Nvidia, who I invest in heavily. Stock price splits 10-1 on Monday, and then by Friday it closes at 131. It started the week at 120 a share. It closes the week at 131 a share. So if you're somebody that got on the stock day one of the 10-1 split and you held on to it, you're up. You're up $11 to $14 a share. Because remember, on Monday, the stock, it dipped a little bit to 117 and then recovered and kept going from there. But it dipped for a minute down to 117. And I know some of the people in my private mentorship club, they actually grabbed it at 117. So they're up right now, 14 bucks, but normal, most of us are up about 10 to 11 bucks if we bought on Monday, which is a nice little cha-ching, man. You know, that's a nice little cha-ching for someone who maybe is just starting out at this thing. And again, guys, every week won't be like that. You know, there'll be some weeks where it'll be the other way. Well, you'll be down 11 bucks, you'll be down 14 bucks. But that's where the psychology of the stock market has to kick in, right? That's where your logical thinking cap got to be on instead of your emotional thinking cap. That's why I told people yesterday, and I spent a lot of time on this, is understand why you're buying anything in the paper asset realm. Why are you buying this stuff? What are you trying to get accomplished with paper assets? What is your ultimate goal? If you're not asking yourself that question, guys, I wouldn't invest. You got to be asking yourself, what is the ultimate goal? What price do I want to enter, and what price do I want to exit? You got to be knowing this stuff. Now, I'm a big believer in time in the market, not timing the market. I'm a big believer in that. So I don't try and time when Nvidia stock is going to go back down to 115 a share. I don't spend none of my brain power do I spend trying to figure that out. The way I spend my brain power is, let's just be in this thing, Richard, long term. Let's be in it. So if it goes from 120 to 131, let's be in it. If it goes from 131 back to 115, let's stay in it. Let's just keep buying, because really what we're trying to figure out is, let me put myself in a position long term where not only do I capture, I want to capture net worth through, stock appreciation, right? I want to capture it through stock appreciation and a little dividend they pay me, what I think is 10 cents a share. It went up from 4 cents a share to 10 cents a share. So that 10 cents a share per stock that they pay me, I got 2,630 stock in this company right now, and it's growing. So they'll pay me 10 cents for every one of those shares, right? Quarterly. That's the dividend. So I take that dividend and do what with it? Let's say it's $300 a quarter. I'll take that $300 a quarter and roll it back into buying more stock. I won't take the cash. I would roll it back in and just keep buying. And that's where the compounding effect of the stock market comes from. When you reinvest dividends and you get what? Appreciation of the stock at the same time. You're getting dividends, which you're reinvesting back into more stocks, and then you get this stock appreciation. That's when it gets wonderful, guys, over a long period of time. At least that's been my experience. So those are the three things that affected the stock market for me and Richard Fain's portfolio. You guys might have other catalysts that affected your portfolio in the stock market this week, but that's what affected mine. The Nvidia 10-to-1 split, the Fed meeting, and the CPI inflation report for May. Those three things affected my portfolio. And I gotta say, my portfolio grew this week, which is a good thing, right? I'll take green if I can get it. Although I'm a long-term guy, the more important thing to me is in 10 years, it's green. A lot of green. Whether it be green or not, every week or every other week or every other month, I don't bother myself with that. What I bother myself with is, if I'm gonna buy an investment, let's just use Nvidia because that's the one I've been buying lately. Let's say we use Nvidia and I say, okay, I'm in at 120 a share. My goal is to stay in the stock till it gets 3, 4, 5, 10x itself. That's the goal for me. So I don't bother myself with little day-to-day fluctuations in it unless it fluctuates down tremendously and I can buy more, then I'll concentrate on it. But the day-to-day stuff, I don't concentrate because I know I'm in this thing from 3 to 10 years, depending upon how it performs. So that's sort of my philosophy when it comes to investing in my entire portfolio. I'm in this thing long-term, so I don't really mind the fluctuations during the week. I don't mind a fluctuation during a month. I don't mind a fluctuation during a year, unless it's a material fluctuation caused by the fund itself or the company itself. Companies just not ran good anymore, or something happens material inside of the company that changes something. That's when I get concerned. But outside of that, I don't get concerned. I just keep investing. So last week, the NASDAQ composite ticked higher on Friday to close at a record for the 5th straight session. That's the NASDAQ. Heavy tech, right? 5th straight session, it closed at a new record high. So for me, man, that's just so positive news, because you got to remember, we got 4 rate cuts hopefully coming next year. So what do you think it does if we actually get the 4 rate cuts? No rate cuts yet, and it's already hitting all-time highs 5 sessions in a row. What happens to it potentially if you get the 4 rate cuts? I just think it goes higher, guys. So some people are saying, well, golly, well, should I just wait on the sideline until it goes lower? I mean, you can use that strategy. It's not the strategy I would use. The strategy I would use is just get in the market. Time in the market is better than trying to time the market. But use whatever strategy you feel comfortable with. That's not the strategy I use, right? I use a strategy of if it's hitting all-time records now, next year when they reduce those rates, it's going to hit more all-time highs. And I want to be on that wave as well. So I don't worry about trying to wait till investments go back down to whatever it goes down to. Some people do that. Ain't nothing wrong with it. It's just not my strategy. So the NASDAQ ticked higher on Friday to close at a record for the 5th straight session. The tech-heavy index inched higher by 0.12% to end at 17,688.88 points. All-time high. The S&P 500 inched lower by 0.04, closing at 5,431.60 and snapping a 4-day win streak. The Dow slipped 57.94 points, or 0.15, to end at 38,589, right? Now we've seen the NAS hit all-time highs. We've seen the S&P hit all-time highs. We've seen the Dow hit all-time highs this year, guys. And this is in a high interest rate environment. We've seen all of these indexes hit all-time highs. What do you think, potentially, not in every case now, but potentially, what could happen to these 3 indexes next year in 2025 when there are 4 rate cuts on the table? There'll be a lot of optimism going into January 2025, guys. A lot of FOMO, a lot of optimism, and a part of the stock market is that FOMO and optimism. That's what drives the stock market up. More people that participate in buying paper assets, the more paper assets become more valuable. The stock price goes up. The more people that buy Nvidia stock price goes up in connection to Nvidia doing what? Continuing to earn. So Nvidia continues to earn, more people want to buy the stock price goes up. That's what you saw happen this week. The stock price starts at $120 a share on Monday. It ends the week at $131 a share. That's because more people bought. And I had told you guys on this YouTube channel, my opinion would be retail investors would be coming in. And for me, the way I look at it, that point was correct. Or you wouldn't have saw the stock go from 120 to 131. Retail investors showed up. And I had been telling y'all that prior to the split. I said on June 10th, you're going to see a flood of retail investors come in. And that's what we saw, in my opinion. There are many opinions out there. My opinion is retail investors showed up. Now, here's the key. Will they continue to show up? Or was it just a quick lick? What will happen on Monday when the market opens, when you got Nvidia closing at an all-time high? Well, it closed at all-time high. It actually hit I think it hit 132 during the day, but it closed at the 131, which in my opinion is another all-time high closing, right? If you look at, if you extrapolate the 131 pre-split, that's over $1,300 a share. Another all-time high. The question is, what will continue to happen going forward? Will retail investors continue to show up? I think they will. Now, as I talked about the other day, Q2 earnings report comes out August 28th, 2024. For me, in my investment strategy, that's another catalyst. And I got to determine prior to that if these guys are going to have the fifth straight quarter of triple-digit growth. Will they have 5 quarters in a row? That's what I had to decide before May 22nd when they came out the Q1. And I decided yes. So what did I do? On May 20th, I bought a large position in Nvidia, anticipating they would have that fourth quarter, or that Q1 would be their fourth quarter in a row of triple-digit growth, and it did. And guess what happened? The shares went up, and I made a lot of money, right? Made a lot of money, and I'm still in the stock, and I'm still buying more. So now, what do? Before August 28th, I go through the same exercise. Richard, are all indications pointing to another killer quarter? How do I know that? Because I'm starting to listen and pay attention and read what everybody in the market is saying about them, what the analysts are saying, like I did last time. Now, that doesn't mean it'll be unequivocally true, but pretty much across the board, everybody knew Nvidia was going to knock it out of the park in their Q1. Everybody. There was nobody out there that said they won't do that. So for me, that's good enough. It wasn't a guarantee, but it was a good enough that consensus across the market was, yeah, they're going to hit it out the park. Let's see what the market is saying this go around. So that's what I'll do. I'll weigh that, right? I'll listen to that. I'll read that. And then ultimately, I got to make the call. And then at that point, I go with my gut. I got my logical thinking cap on, and I go with my gut feeling. I go with my instinct at that point. But the only way I have a good gut and a good instinct if I pay attention and I know what's going on with this company. And I know what the market is saying about this company. That's the only way. So I tell you guys all the time, if you're going to be in this thing, you don't have to be an expert. You just got to be paying attention. You got to be dialed in. You got to read right? You got to ask questions. That's why I say, you know, for a lot of the folks that I rock with over in the private mentorship group, that's what we do. See, you can ask me questions, not that I'm the expert, but I guarantee you, I do more research than a lot of you guys. Why? Because that's all I do. I don't work. You know, I'm financially free. I can just do whatever I want to do during the day. I don't have a job I got to go to. So I can spend time looking at my investments and seeing every way I can to multiply them. And I try to pass that information on to you guys. And it's just information. That's all it is. There's no guarantee for nothing. But my folks in the mentorship club, that's what we do. So yeah, you know, the stock market last week for me was a winner. It was a great week, right? My position in the video goes up, you know, really nicely. My S&P 500 ETF, SPLG, doing amazing. FTEC, doing amazing. Right now, I'm about a 12% return on FTEC right now. About a 12%er. I'm about an 8%er on SPLG. And some of y'all might, oh, that's not enough. Oh, guys, trust me. You extrapolate that out over 10 years, man. It's a lot of money I'm making those two funds. When you see, a lot of us we just narrow-minded, right? We just think about tomorrow. We don't think about down the road. We just think about, oh, golly, what is it going to be tomorrow? No. See, I'm a down the road guy. 10 years from now, if I can get a compounded rate of return of between 12 and 15% on FTEC on the amount of money that I invest, if I can get a compounded rate of return of 8 to 10% on SPLG, see, y'all, oh, golly, QQQM, it's doing better. But you're talking about 1 or 2 years. And I ain't knocking QQQM. I'm just saying, listen, man, I'm down the road here. I'm talking about 10 years. I'm going to be in these two for 10 years. And if I can get that type of compounded annualized growth, I'm going to knock it out of the park in those two. So I'm extremely excited about what's going on with SPLG and FTEC. I'm happy with it, right? I'm happy with it. Very, very happy with that. We already know what's going on with the Mag 7, killing it, especially with Apple starting to pick up. All we got is to get Tesla going. Once Tesla gets going, let me tell y'all something, guys. That Mag 7, you look at the Mag 7 in 2023, and this is when Tesla wasn't even carrying its weight. Apple wasn't even carrying its weight in 2023, and they still did like a 95 to 100% ROI in 1 year. Apple wasn't carrying its weight, nor was Tesla carrying its weight. Now you got Apple starting to pick up. Apple's over $200 a share. It's starting to pick up, starting to carry its weight. So that'll be another big punch. Obviously, you know what Nvidia is doing. And then you know what Meta is doing. You know what Microsoft is doing. You know what Alphabet's doing and Amazon. Tesla's the only one lagging. If Tesla picks up at some point in the next few years, my investment in the Mag 7 is going to be tremendous as well. And I buy the Mag 7 individually, guys. I don't buy them in an ETF. I buy them individually through dollar cost averaging, right? And I do them through dollar cost averaging. So what I do is I'll take a certain amount of money every month and I'll say, well, okay, let's just say for simple math, let's just say I say, okay, $1,000 a month, I'm gonna put in the Mag 7. I just divide that $1,000 a month by 7. Whatever that number is, I put it in each one of them, fractional shares through the Mumu app, through the Mumu brokerage app. So the Mumu brokerage app, like I said, guys, down in the description box. If you want to rock with me and use the same brokerage app I use to buy these paper assets, you certainly can. You put $100 in there, they're going to give you 5 free stocks for just trying out their brokerage app. If you put $1,000 in there, they're going to give you 15 free stocks for just trying out their brokerage app. That link is down in the description box. Go click on it. Go get that free stock. Go get that free money. Lock and load. Be ready to go for Monday. And here's the thing. Send me an email through the website, www.richardfain.net. Second link down in the description box. And let me know you've opened the Mumu account. And I'm going to send you some tutorial videos to help you learn how to use the app. And then I'm going to send you my blueprint 1.0, 2.0, which outlines all the ticker symbols, all that stuff for the stocks and ETFs that I'm buying. So if you want that offer, get down in the description box, open your Mumu account today, and send me an email. Well, let's keep moving on through what happened last week in the stock market. Like I said, the tech heavy index inched higher. We know the S&P inched a little lower, and then the Dow inched a little lower. The University of Michigan survey of consumers showed that consumer sentiment declined to 65.6 in June, down from 69.1 in May. The reading also came below the 71.5 Dow estimate. 8 of the 11 sectors, so we got 11 sectors. Remember, I talk about the S&P 500, and the reason I invest in it is because these 11 sectors. It's just not tech. You got 11 sectors represented in the S&P 500, guys. That's pretty much every sector in the United States. Pretty much. So if the tech sector has a bad quarter, I got 10 other sectors that could have a good quarter. That's why I love the S&P 500, because it's just not nailed down to 1 or 2 sectors. It's 11 of them. All big boys. You can talk about the top 500 companies in America, all big boys. One sector does bad, does not kill the S&P. Now, the tech sector, I will say, the Magnificent Seven, the 7 top companies in the S&P 500, they're all tech companies, and they carry a big stick. So when you look at the weighted value of those 7 companies in the S&P 500, it's 28%. So those 7 companies represent 28% of the value in the S&P. The other 493 companies represent 72% value. So they do carry a big stick now, but it ain't the only stick, is what I'm saying. That's why I love the S&P. So 8 of the 11 sectors in the S&P slid during the session, with communication services, information technology, consumer staples emerging as the only winners. Why then if 8 of the 11 sectors slid in the session, why isn't the S&P in the negative? Because of the big 900-pound gorilla, information technology, which is the tech. That's why. Remember, I told you they make up 28% of the value. So even if 8 out of the 11 slide, don't do as well, if the tech sector does well, you're pretty much going to have a positive S&P. Now, that could be a gift and a curse. Something like that. Y'all know what I'm talking about. So all I'm telling you is, S&P is my go-to. But you got to also understand it is tech heavy. Not from a company standpoint, but from a value. Who brings the biggest punch? The tech industry bangs the biggest punch because your top 7 most valuable companies in America are in the S&P, and they're all tech companies, all of them. So they carry a big stick, which I'm okay with. I'm okay with that. And like you said, you still had consumer staples and communication services that also did well. Within the broad market index, more than 360 stocks ended the day with declines. So that's why earlier when I said the S&P inched lower, that's why. They inched lower because of 360 of the companies in there didn't perform as well, right? But having said that, they're still at 5,431.60 points, which is still pretty much a record. Just think if we get better participation from those 360 companies next week, next month, next year, it goes higher, right? It goes higher. I think what you'll start seeing on the S&P, you'll start seeing more analysts, more Wall Street firms start putting up a, higher points total. Like a lot of them at the beginning of the year said 5,500 points. I think we hit 5,500 points way before December. That's my opinion. we may end out the end of this year, if it goes right, we may end out anywhere from 56 to 58 to 59 maybe. Who knows? Maybe even 6,000. I know a lot of people, oh, we'll never get to 6,000. See, nobody, he said we never get to 54, but we did. So I'm an optimist, man. You ain't got to agree with me. I think it'll get to 6,000, and I'm gonna keep pulling for 6,000. Why? Because I'm heavily invested. The reality is that even in these bull markets, there are going to be days where you take a pause and where people take some gains. I say that all the time on this YouTube channel, all the time. I tell you guys this, well, what happened in the market today? People took gains. Remember, not this week, but the prior week, before the Nvidia split. You see how volatile it was? That's people taking profits, man. Ain't nothing happened to the company material. The company didn't change. It was just people taking profits. People have different investment strategies. They're taking profits. That's okay. I'm okay with that. You may see that next week. You may see Nvidia stock slide some next week because it closed at such a high price this week. Closed at 131. So people may take profits early next week. And you may see the stock slide a little bit. That's people taking profits. That's why I told you guys yesterday, if you're in a position where you're in the money and you're not comfortable with this thing, get out. Take your profits and move on. There ain't no shame in that game, right? Especially if you're not built for this thing. If you're not built for long-term volatility in this stock, get out. Get yourself out of here if you're not built for it, right? That's all I'm saying. Ain't no shame in your game taking profits, guys. If you made money and you're happy with where you made the money at, get out, right? Get out. The reality is, even these bull markets, there are going to be days where you take a pause and where people take some gains. We've had such a strong run, especially coming off of soft PPI and soft CPI. I think it's a pretty natural place to take a pause after a pretty aggressive rally. This is coming from some strategists, right? And that's what people are doing, right? That's what people are doing. If you ain't in this thing long term, hey, might be a good opportunity to take some profits. Even if you are in it long term, it may be an opportunity to take some profits and then just stay in with the rest. I don't know. You got to make that decision for you. But you got to be built for this thing, because if you see a $20 per share decline in the stock price of Nvidia and you ain't built for this, it ain't gonna be pretty for you mentally. It's been a lot of stress. So all I'm telling you, you better be built for it, because that can happen, and it probably will happen. I know it probably will happen. This stock could be 131 at the end of the Friday and could be 110 at the end of next Friday. It could be, but you better be built for it, because it's coming. Just know that. All right. So let's keep moving. Hopes for a continued cooling of inflation have boosted the S&P and the NASDAQ this week. The S&P and NASDAQ composite ended the week higher, about 1.6% and 3.2% respectively. Wholesale inflation unexpectedly ticked down, 0.2 last month, while economists polled by Dow Jones expected the gauge to increase. That follows a consumer price index reading that was flat on a monthly basis in May. Elsewhere, software giant Adobe leaped 14.5% Friday after fiscal second quarter results surpassed Wall Street estimates. That's why I keep telling y'all, man, for me, when I'm looking at my companies that I'm in, especially the individual stocks, I like to take another look at them before their earnings report comes out. Because if they hit it, it's going to jump. And if I think all indications are pointed that they're going to hit it, I'll buy more of the stock just to take advantage of that bounce after they come out with the earnings. So if you're an Adobe fan and you took that strategy, you'd be up 14.5% right now. Now, I don't know if that'll last, but just a little pro tip that I use when I'm thinking about my individual stock positions. I always like to check them prior to an earnings report coming out, just to see what the market is saying and see if I can gauge if this thing gonna be positive or not. And if it is, I may double down and buy a little bit more just to be able to make a little bit more upside. Declines in Caterpillar and Boeing weighed on the Dow, while Carnival and Norwegian Cruise Lines were the biggest laggers in the S&P. There you go, man. That's what happened in a nutshell, guys, last week in the stock market. Again, man, you know, I am a big investor in paper assets right now. And the reason it is because I believe we're in a bull market, but I don't believe we're at the top of it yet. I don't think so. I think the top of the bull market is coming. Now, that doesn't mean we won't have volatility along the way. We will. But I think we potentially have been in a bull market since 2009. We had some corrections, right? We done had some corrections. But I still think we ain't even at the top of it yet. I think the top is coming. So I'm gonna press ahead. I'm gonna be smart. I'm only gonna buy big boy blue chip paper assets. I'm not gonna be buying any of this stuff that I ain't never heard of before. Or don't fall into the big boy blue chip category. I'm only large cap. I do a little bit of small and mid cap, but I do that through my company. I got a simple IRA through my company, RF Financial Consulting, on the Vanguard platform. It's a simple IRA that I dollar cost average in through my company every month. That's the only investment that I have where I buy large cap, small cap, mid cap, but they're all in VTSAX. That's the ticker symbol. Now, I know some of y'all want to call it a mutual fund or whatever. I call it an index fund. You call it whatever you want to call it. I call it an index fund. It's passively managed. My definition of a mutual fund is actively managed. So we'll agree to disagree. Now, I know what Vanguard calls it. Vanguard says it's a mutual fund, but it's inside the mutual fund family, but it actually is an index fund. Why? Because it's not actively managed. It's passively managed. In my opinion, we may disagree on that. Who cares? But that's what I buy because I know people, they want to be right. Oh, God, no, it's a mutual fund. It's a mutual fund. Call it whatever you want to, man. But that's the thing that I invest in on my business side. But that's that fund has about 3,700 companies in it. It's got about 3,700 companies in that fund. And they're large cap, mid cap, small cap. Now, you don't know what that is, go out on Google and research it. Just tap in, what is a mid cap? What is a small cap? What is a large cap? Give you a really good definition for it, guys. That's not why I'm here to try to be the expert and give you all these definitions like I got everything in the filter system memorized. Well, I can spit all this stuff out. No, I just go to Google when I don't understand something. That's what I try to get my folks to understand. Go to Google, do some research, get educated, and then come back with a question, right? So for me, that's the only thing that I invest in that has mid cap and small cap in it, along with large cap. Everything else outside of that simple IRA, everything else I do is large cap. Everything, right? Everything else I do is predominantly large cap. Big boy, blue chip, been around forever, profitable, Most of them have $1 trillion net worth or higher in my individual stocks. Every individual stock I buy right now, except Tesla, has at least $1 trillion market cap. Every company, except Tesla. Tesla is the only one that doesn't have $1 trillion market cap. But I think they will get back there once their stock price improves. Kathy Wood made a big investment, or I don't know if she made a big investment, but she did say Tesla. She believes Tesla could go to $2,600 a share. Now, I don't know if that's true. I don't know about that. But that's the only big boy company that I buy individually. I'm talking about individual stocks that doesn't have at least a $1 trillion market cap. Everybody else does. Everybody else does, except Tesla. And I ain't giving up on Tesla. So I'm going to stay on Tesla. I'm going to keep buying it through the Mag 7. I haven't made any more big investments in Tesla. If it goes back down to $150 a share, I will make another big investment like I normally do. Make a little money, get out of it, and stay on the dollar cost average wagon. So that's the strategy going forward for the rest of 24. The rest of 24 for me is, get on my Mumu brokerage account and continue dollar cost averaging into the Mag 7, continue buying Nvidia individually, potentially when Chipotle later this month does its 50-to-1 split, I'll come in post-split, gobble me some up, and just be 10 years. Let's let it ride for 10 years, right? Who knows what it'll do, but I'll let it ride for 10 years. Put $1,000 a month in it for the next 10 years and just see what Chipotle does. If it reignites itself and continues growing, and I'll participate in the upside. If it don't, that's okay. I'll just get what I get. I eat at Chipotle, so if I'm eating there, I might as well go ahead and buy the stock. That's the way I look at it. If I'm gonna give my money to somebody and it's somewhere that I go to regularly, I'm buying the stock. Just buy the stock. Right? I need to be an owner if I'm going to be going there, spending my money there. I just need to be an owner. So I don't know what Chipotle will do after the 50-to-1 split, because honestly, I have not followed Chipotle that much. I know it has had a really, really good run. Let's see if it can reboot and rebuild the stock price after the 50-to-1 split. I'm going to guess they can to a certain extent. So it's a long-term deal. I'm going to get into that one. And I know you guys, I've already told you guys, I'm thinking about Visa. They have about a half a trillion dollars. They got about a $500 billion market cap, about 550, something like that. Right around what Walmart's market cap is. JP Morgan, Walmart, all those have a market cap in that 550 billion range, like a $500 billion. I'm not going to buy JP Morgan Chase. I'm not. That doesn't mean you can't. I'm just not buying them. If I buy bank stock, it'll be Bank of America and Wells. I'm not buying any bank stock right now. I already have bank stock. I'm not buying any more. I'm concentrating on the Mag 7 because I'm looking for this maximized growth over the last 10 years of my stock market investing, because that's it. After 10 years, I'm out of the market. So I got 10 more years, so I got to get the best growth I can get over these next 10 years. And right now, bank stocks don't represent that for me anymore. I think bank stocks are great if you're looking for income. I think they'll provide you with growth and they provide you with income, because I did it for many years with Wells Fargo and Bank of America. I had growth, modest growth, not like Nvidia growth, not like Chipotle growth, not like Tesla growth, but moderate, growth. Like kind of what the market was doing for financial services companies. But they also paid a better dividend. Wells, at one point, I was making 51 cents a share on Wells dividend. Now, it ain't that right now, but back in the day, I was making 51 cents a share every quarter, right? Nvidia's paying 10 cents. These guys were paying 51 cents. The difference is Nvidia grows faster. So you get the appreciation in the stock price, where you don't get as much in the stock price appreciation for Bank of America or Wells. You get decent, don't get me wrong. Now, I've been in Wells a long time, right? But Wells then went from $22 a share in 2022 to over $60 a share in 2 years. So your boy rode that appreciation, and then I cashed out. I cashed out at $60 a share. I rode that till the wheels fell off of it. Right? Rolled it till the wheels fell off. $60 a share, I cashed out, rolled it over to Vanguard, and redeployed it in Nvidia. And now you know what that's done. I'm up about 100 grand in Nvidia right now. So I'm good, man. I mean, the strategy, the blueprints are working. I guess basically what I'm saying, wealth transfer blueprint 1.0, 2.0 are working. They're doing great. Every one of them. SPLG is up year to date. Like I said, about 8%. Matter of fact, I don't think I got it in here. But it's up about 8%, something like that. 7 or 8%. So no killer, but still I'll take it. FTEX, I think 12, 13%. Take it. Mag 7, what, 20, 25%? Killing it. I take it. And then, of course, Nvidia is just crazy, right? I don't even know how high that's up, but it's killing it. So the blueprints are working. The blueprints are doing great. I mean, for me, it's amazing. Now think about this. If I get that compounded growth every year, compounded now, every year for the next 10 years. Let's say I get that 8% compounded growth, 8% compounded growth over the next 10 years in SPLG. Nice little nest egg. What if I get that 12 to 15% compounded growth over the next 10 years in FTEC? What if I get a 25 to 30% compounded annual growth in the Mag 7 over the next 10 years? And you know what I'm thinking I'm gonna get in Nvidia. Even like I talked about yesterday, if I can get a 28.5 compounded growth in Nvidia over the next 10 years, that's a 10x on my Nvidia investment. If I can get 28% compounded growth over the next 10 years in Nvidia stock, that's a 10x. Will it do it? I don't know. I know a lot of people will say no, but I'm an optimistic investor, man. I think I can do that. So Wealth Transfer Blueprint 1.0, Wealth Transfer Blueprint 2.0, completely working, doing great. I'm loving it. I'm gonna continue dollar cost averaging in it every single month, earning this money over here, actively earning money, not spending it to make other people wealthy, but taking it and rolling it into Blueprint 1.0 and Blueprint 2.0. Boom, that's the game, right? That's the game. And then searching for other little add-ons. Maybe I create a 3.0 and I add in Chipotle and I add in Visa. Maybe I add in Broadcom. Maybe. Infinite possibilities, guys, is what I'm saying in the stock market. Infinite possibilities. If you got the right mindset, you clean your filter system out from that old way of thinking, you take off your emotional thinking cap, you put on your logical thinking cap, infinite possibilities. Infinite possibilities. I had a gentleman email me, not email me, but DM me on Instagram yesterday. And he said, hey, Richard, I heard you talking on your video about this island in the Caribbean that you want to buy once you get to the end of the rainbow. And I said, yeah, man. He said, you looking to buy an island or you want to buy a piece of land? I said, no, I'm trying to buy a piece of land. But I wanted to have full utility infrastructure. I ain't trying to buy no survivor type deal where you ain't got no electricity and I ain't trying to do that. I ain't trying to do that. I ain't trying to rough it. No, I ain't trying to do that. I'm like Kevin O'Leary. Kevin O'Leary said, I don't want to stay nowhere that don't have a mint on the pillow when I walk in my room. That's me. I ain't trying to do no camping. I ain't trying to do no roughing it. I ain't trying to be no powers out here. You got it. Everything is a lantern. I ain't trying to do any of that. I want sort of a 5-star resort type deal, but not like a resort, is what I'm saying, if that makes sense. So I told the guy, I said, listen, man, you run across anything like that, because I think he's over there. I said, you run across anything where it's like a private island, you know, maybe some big boys, big girls with the private jets and the big yachts, and they got a little piece of land over there that nobody else don't want, contact your boy, because that's what I'm looking for. I'm looking to build a house, but I want mine to be oceanfront. Now, it ain't got to be no highly trafficked, commercial. I ain't looking for that. I ain't looking for a bunch of resorts on it and all that stuff. I'm looking for a fully infrastructure, utilities. Trying to get these big fancy words and can't get them out. Infrastructure, utilities already there. You got to have internet, you got to have lights, you got to have first world plumbing, first world electricity, first world internet. You got to have all that, or I ain't going. So the guys checking some stuff out. So if any of you guys know anything about the Caribbean and you know something like that, that's a hidden gem, but got the first world electricity, first world plumbing, first world internet, send me a DM on Instagram, man. Let me know. I'm interested, because once I get to the pot of gold at the end of the rainbow in these 10 years, I want to already have that thing ready to go, set up. I want to work over these next 10 years. I want to maybe buy the land right now and then start, thinking about architecture. But that's my pot of gold at the end of the rainbow. That's what I'm going to do with the rest of my life, man, is live part-time over there, part-time here in Florida where my family is. And that's the thing I try to tell people. If you're going to do this paper asset thing, if you're going to do this investment thing, you better find something. See, for me, I already found mine. So every morning I get up, if I even have any kind of bad thought, I think about that. Why are you doing this, Richard? You're 56, man. You ain't got to be out here on this YouTube channel. You ain't got to be doing this. Why are you doing this? And I got to say to myself, the main reason I'm doing it is because I asked God, I said, Lord, I done been in banking 25 years. I'm ready to get out. Please show me something. Direct my path to something that I can utilize my skill set to help people. I said, Lord, just put me in the right direction. And he did. So he put me in this direction. So I when at least for my faith, guys, and I'm not gonna turn this into like a sermon, but I'm just trying to give you an indication of who I am. So for my faith, it's led by God, right? That's the most important thing in my life, God and Jesus Christ. When I'm asking God for something and he gives it to me, every time I ask him for something, he don't give it to me now. Let's get that straight, number one. He don't give it to me every time I ask for something. But when I do ask him for something and he gives it to me, I know to treat it with care. And I know he will tell me when I'm done. And he ain't told me that I'm done yet. He'll tell me, he'll say, Rich, he'll whisper. It won't be no thunder and lightning. He ain't there's no burning bush over there in the corner. But he'll come to me and he'll whisper it. Well done. And then I know I'm done. But until I get that, I'm going to press on. I'm going to keep putting this information out here, helping folk and doing the work that I was asked to do. So that's the driving force, guys, behind everything I do, right? Help people, right? Leave a legacy for my children. Number 2, right? Number 1, God. Number 2, leave a legacy for my children. Number 3, help people, right? Help people. And then number 4, get to the pot of gold at the end of the rainbow so I can live the rest of my life the way I want to live it. All right? So that's it, man. You got to find whatever is important to you, and you got to write them things down, and you got to focus on them things every day. If I'm you, I'm putting them things, I'm going to have a little sticky note in my car. I'm going to have a sticky note in the bathroom, on the mirror. I'm going to have a little sticky note at work. So every time I hit some mental adversity, I want to be able to be reminded through those sticky notes. And I call that visualization. I want to be reminded through visualization why I'm doing all of this. I want to remind myself why I'm doing all of this. I want to keep it in the forefront of my mind. So I often tell folks, find your reason. Find a compelling reason to make you do something that you necessarily don't wake up every morning wanting to do. That's how you get through it, guys. You got to have a compelling reason that means more to you than fear. That means more to you than procrastination. That means more than you than tiredness. That means more to you than instant gratification. You gotta find something over here that means more to you. And it can't be, oh, I just want to make $10 million. Why? Because you're gonna be easy to quit when it's time to quit when you say that. It ain't easy to quit when I say I want to leave a financial legacy for my children. It ain't easy for me to quit when I say God pointed me in this direction and he has not told you it's time to go. See, when I think about that, I can't quit. I can't quit. I don't care what emotion I feel over here. I cannot quit when I think about those two things. God puts you right where he wants you to be. Until he tells you you're done, you're not done. And then number two, gotta leave a financial destiny for them kids. I got to. That ain't important to them, but it's important to me. They could care less. They doing well. They all love them in their life, leading their little lives and doing well. They don't ask me for no money. That's one thing about my children, my girls. They don't ask me for no money. But they know I'm the safety net if they need it. But it ain't none of this, oh, I made a mistake, Dad, and can you bail me? They don't do that. So they don't care if I leave them a financial destiny. I care. That's just who I am. So those two things right there, anytime I have any doubts, or I'm having a bad day, all I got to do is think on those two things, and I'm instantly out of that little 15-minute pity party. I might have a pity party for 15 minutes, but I'm not going to have the pity party all day. That's not going to happen. Why? Because I think about those two things. And I'm instantly out of the pity party. Some of us, we get in the pity party and we just live there for 2 weeks. In the pity party. For 2 weeks. Why? Because you don't have a compelling reason not to be in the pity party. You got to have a compelling reason not to be in the pity party to get out of a pity party. If you don't have anything bigger than that pity party, you're going to stay there your whole life. You got to have something compelling and more important to you than the pity party. Figure it out, guys. You can do this. All right, guys, appreciate you. I know we're going to wrap this thing up. It's Saturday. I know y'all trying to get out and do your thing. So I'm going to get on out here and go do my thing. But before I do, y'all know I got to hit you with the links down in the description box. Get over to the website, www.richardfain.net. Check out the digital products. Consider signing up for the paid private mentorship club, right? Consider it. You ain't got to do it, but consider it. 600 other people have already considered it and they're doing it. And they're having a good time. I guarantee you, get over there, check it out, and see if they're having a good time. If they're not, if it don't fit you, bounce. That's all you got to do. But I think the value you're going to get for this little bit of money that you pay every month is, it's legit. So check it out. Check out the paid mentorship group, private mentorship group, 90-minute live streams every single week, Q&A style, just for the members, asking me questions. I'm answering them rapid fire. You got access to me 365 days a week, 7 days a week, 365 days a year, 7 days a week through direct message on the platform that we use, direct to me. People use it every day. I get 50, 60 emails a day from people on the platform where I'm helping them build out their financial plan. I'm helping them figure out what goals they're trying to hit because they're having a hard time pinpointing goals. And I'm just helping them out pinpointing. Hey, what's important? What do you want to be in 10 years? If you had the ideal lifestyle, what would that look like? See, this is what people have to decide because that's going to build the plan. I want to know exactly what lifestyle I want to live. I want exactly what I want to be doing and exactly how much I think it's going to cost me to do it. Then I build the plan. I don't build a plan first and don't have no idea what I want. That's a plan you're going to quit. Why? Because you don't have a compelling reason. I keep telling you, you better have a compelling reason to go through this heartache you're going to have to go through to get the wealth, right? So that's what I do all day long when I'm done with the YouTube channel. I answer these questions and I'm in these back and forth conversations with like 50 people. Now, the rest of them, they got access to, but like I said, people over there in that group, guys, have different degrees of financial literacy. They're at different points in their journey. A lot of people are over there not because they don't have a plan. They're over there because they want to be around people to help them, encourage them to stay on their plan. They don't necessarily need me to walk them through what they need to do. They're already doing what they need to do. But they want to be around a group of people who like them because they know they're not going to get that in the real world. In this real world over here, they ain't going to get that. Most time people going to try to prevent you from building wealth because they don't want to build it. They ain't capable of building it. So over here, you got people with different degrees of financial literacy. So all of them don't need me like that. A lot of them are just there for the community. Believe it or not, most of those people are there just for the community, not for me. Now, it's good to know, and they know if they need me, I'm there, but they ain't there for me. They're there for the camaraderie. They're there for that financial fellowship that they ain't gonna get nowhere else in their life. That's why they're there. So consider it. Consider it. Consider it. Also, the Mumu link, if you wanna get yourself up to 15 free stocks and use the same brokerage app that I'm using to buy paper assets to build my net worth, 3x my net worth, triple my net worth. Get down in the description box and click on that Mumu link. Hundreds and hundreds of you guys have. Right? A lot of people have. And guess what? Love it. A lot of them have sent me an email through my website. Richard, signed up for Mumu. Send me those tutorial videos. Send me Blueprint 1.0, 2.0. I already told y'all how Blueprint 1.0 and 2.0 is doing. For what I need is perfect. I know some of y'all, oh, that's nothing. I'm getting 75% in something else. Perfect. Stay there. Stay there. Good for you. Kudos. I'm going to get what I'm going to get with my little plan. You get what you want to get with your plan. Ain't that a good one? That's the beauty of this thing, guys. We can all build our own plan. You don't need my plan. Some of y'all might want to look at my plan, but it doesn't mean you need it. But if you want to look at it, I'm offering it to you, right? So send me the email, www.richardfain.net, second link in the description box. Send me that email. I've opened my Mumu. I funded my Mumu. I'm ready to get those tutorial videos so I can learn how to use the Mumu app. And I need the blueprints 1 and 2. So at least I know what you're doing. Not that I got to copy your plan, but at least I know what you're doing. That'll help me make some determinations in my plan so I can get off to a good start and get on my financial freedom journey, get to my pot of gold at the end of the rainbow. That's it. And then if you want to, follow me on Instagram, Richard Fain, Millionaire Mentor Instagram page, or link is down in the description box. Give me a follow and then send me a DM on Instagram and let me know you're rocking with me so I can say thank you. Please remember, guys, I'm not doing any mentoring through Instagram. I don't mind saying hello and answering a quick little question, but I'm not doing a full mentorship over there. So if you want to be a part, and I'm not doing it in the videos, the video comment section of the videos. I'm not doing it there either. I'm not doing it through my general email through RF Financial Consulting. I'm not doing it there. What I'm telling everybody is if you want to be mentored by me and be a part of my group, our group, not just mine, because there's 600 people over there that are individuals and it's our group. If you want to be a part of that group, you got to get over there and get in it. That's the only place I'm doing mentoring. So those 50 or so people that are direct messaging me and we're back and forth, that's who I'm mentoring. All the rest of those 600 over there, I'm helping as well because I'm in the community chat, lending my experience, lending my opinion. It's just my opinion. None of us are experts over there, or we wouldn't be there. An expert ain't got no business over there. An expert go start their own thing. See, that's what experts do. Experts don't come to other experts' thing. Experts go start their own thing. So we ain't got no experts over there. I'm not an expert. They not an expert. If you're an expert, you go start your own thing. And nothing wrong with that. But I don't need no bunch of experts over there. Confusing people. Right? So we have a good time over there. And that's the only place I'm mentoring. That's my point. So please don't be upset with me if you send me emails and you got your whole history in there. And I send it back to you and say, hey guys, you got to come over here to the mentorship group. It's not fair to the people who are over here in this mentorship group that I'm just willy-nilly in this thing over here. And they're over here and made an investment to be over here. But y'all over here just don't want to make no investment, but want to get all the fruit. Want to get all the fruit, but don't want to plant no trees. You don't want to plant no fruit trees, but you want all the fruit when the fruit grow off of the fruit trees. No, it can't be that way no more. So please understand that. If you're not happy with that, I get it. If you don't want to watch my channel no more, that's fine. I don't have no problem with that. If you don't want to watch my channel no more because I have made a decision to do it this way, I get it. There's about 1 billion other guys out here on YouTube. Go find you one that can meet your needs. This is what my objective is, right? The objective is to grow my mentorship group. That's my objective, is to grow this mentorship group, grow this thing to 10,000 people where everybody is in that thing getting the freedom, right? That's my goal over these next several years, is to grow this thing as big as I can grow it and help as many people as I can help. So if you want to get down with that, whether it be for 1 month or 15 years, get down with it. If you don't want to get down with it, I understand. I'm not going to hold that against you. You can still watch the YouTube videos if you like, but I just like to be crystal clear and so people don't have no misunderstanding. The only place I'm doing mentoring, period, is through this group over here. So if you want to be mentored, you want to be part of a good group of people, www.richardfain.net website, click on join or membership, click that. It'll take you over to the Discord. You can sign up. It's a paid membership. Now the Discord will allow you to sign up for free, but free is what free is, guys. You know you don't get much for free in this world. You don't get much for free. That's all I can tell you. Let's be in the real world here. You don't get much for free. So, Young, you got where I stand on that. Guys, have a wonderful Saturday. I'm going to see you back here tomorrow, 10:30 a.m. Eastern time. Yep, on Father's Day, I'm here. Don't get me wrong. I'm going to still enjoy my time with my family on Father's Day, but I got work to do. And nothing no company, gotta get it in, right? I got a call in. So I got to get that in. So for those of you that want to check in, check in. If you don't, I understand. I'll see you back here Monday at 10:30 a.m. Eastern time, right? Because y'all know I'm here 7 days a week, 365 days a year, unless something happens. Outside of that, I'm here. That's the commitment. That's the level of commitment I've made to these priorities in my life. God, family, you guys, and then pot of gold at the end of the rainbow. Those are the 4 commitments in my life. I've made that commitment that I'm going to do this and I'm going to do it. Right? So keep that in mind. Well, appreciate you, man. Lock it in with a thumbs up before you get out of here. Whoever gave me that super chat, thank you. I appreciate you. I appreciate you very much for the super chat. So thank you. Thoughts become things. See it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. I'm going to catch you guys on the next one.